The second largest economy in the world is showing massive signs of inflation. On top of it, they are inflating their numbers like something you've never seen before. In fact, as an American, we always are taught to potentially not trust the numbers coming out of China. But this might be something that is very unique and something that we've never seen before. And this is headlines that are not just coming from me saying, hey, look out, watch out for big bad China. No, 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 not so fast. These are headlines that are coming over that are saying, hey, China is inflating their auto industry sales by exporting new cars as used, right? So it's interesting. Why are they doing all this? And why are they looking at these cars like this, right? Because they're essentially inflating car sales for years through burgeoning the government backed gray market that registers new cars right after the assembly line and then ships them overseas as new. These so called zero mileage cars have never been driven, but they're being exported as used to car markets like Russia, China, or Russia, excuse me, Central Asia, Middle East, allowing Chinese automakers to show growth and to dispose of cars that would be difficult to sell domestically. Now, I don't know about you guys here in the chat and watching at home, but that doesn't exactly seem like a sign of great economy, right? And why are they doing this to those specific places? Well, we've been tracking how the Chinese government and the Chinese economy have been doing since the tariffs, right? So the economic trade war between China and the United States really seemed to hit China the hardest, in fact, of any country at all, right? So there's been a bunch of different issues here, and Trump has threatened to impose international emergency or the EPA acts on Canada, Mexico, and China related to fentanyl and national securities. And under the imposed tariffs, the weighted of applied tariffs on imports would revise to 16.1%. So China is looking at this and saying, hey, you know what? We're looking at a big issue here. But the tracking the tariffs, the key moments in all of these trades here um, are, that in the 2025, the U.S. and the 2025 trade negotiations, U.S. and China engaged in these disputes, but they agreed to lower. Now, the timeline here is what is very interesting, right? Because the U.S. announced this, but shortly thereafter, the trade talks occurred in London, and we haven't seen big things come from that. But the reality is that the consumer confidence, what we're seeing in China is that these, effects of the overall market have really hit China the hardest, and in fact, haven't really hit the United States quite as hard. You know why? Well, the domestic and the economy of the United States, we're the number one consumer economy in the globe, right? So everybody wants to trade with the United States. But China trying to, quote, double down on domestic demand to power economic growth isn't being super successful, right? Because why are you telling everybody that you're selling these new cars and they're used and selling these to these different areas when, they're not necessarily there, right? So I think the reality of what we are seeing is that trade tensions have really hurt China the most and really have had an overall effect. And we've seen that the bank lending, I covered this not too long ago, that bank lending in China was cut significantly. The new loans in April fell below expectations and hit a 9-month low in May. So the decline of not only like shipping off cars and saying, hey, these are new, the amount of bank lending occurring in China is dropping significantly as well. So this is all leading me to believe that the Chinese economy is not quite as healthy as everybody is stating here. And that, hey, these trade tensions are dramatically hurting China a lot more than the United States. Well, Donald Trump loves to do the art of the deal, so to speak, right? So come in extremely hot and then pull back and, maybe we land at a place that's higher than we initially expected. Well, China might need to play nice a little bit quicker just of how quick we're seeing China, come on down here, because the global lending market and the decline is partially attributed to the cautious market sentiment despite recent interest rate cuts and the truce. But China's global lending has also decreased, retreating to levels not seen since the late 2000s. The new loan commitments flatlining since the end of the pandemic. This is reduction in lending is occurring as many developer nations face a surge in debt repayments. So it's very interesting that we're seeing this kind of play out here in real time, because the narrative was oh, you know what, Trump is not really taking, or is taking advantage of these guys. But these tariffs are hurting all kinds of industries. It's not just the automotive. The US doubling its tariffs on steel and aluminum imports, except for those from the UK. Canada is set to retaliate those ones as well. But really, the whole thing is all around the US and China trade war. They've backed down from the threatened of the 145, but Trump's done deal with China as a trade framework. We've seen that their trade talks started on June 9th. I haven't heard that anything has closed in the meantime, according to the initial demand surge following the U.S. de-escalation ahead of August 12th deadline on China may be in the rear view. However, the carriers are expected a stronger and more prolonged transparent container volume that has increased capacity to March, early April, right? So they're saying like, hey, everything has increased. But the reality is that the consumer confidence and what everybody is looking at here for the United States domestically, everybody's getting more confident with what we're seeing. Right. So, what are the biggest signs of a recession? Well, when a recession really occurs, when the general public really truly believes we're in a recession, right? Like, when do you lose confidence in a fiat currency? Well, it's when majority of the people, the constituents, majority of people utilizing the dollar say, "Hey, I don't want the dollar anymore." Right. So that occurs when people don't have faith in the US government, don't have faith in the US military, all these different things, right? So the consumer kind of confidence and perception is actually a huge driver on whether or not we are actually in these scenarios. I know it sounds crazy with how much data that I love to present to you guys here. The reality is that, the perception is reality somewhat in here, but the fresh data resumes a trend of worsening consumer confidence but last month a burst of enthusiasm appeared to snap the malice, and the decline in consumer confidence took hold, right? So when Trump dialed back some of his steepest leving, easing the costs imposed upon companies and elevating the concern of the sharp surge of inflation, importers typically pass along the higher tax burden. So now that Trump and the taco trade is what everybody likes to call it, right? So what is in effect currently? Let's take a step back here. So China Briefing Weekly. So as of June 16th, the Bureau of Industry and the US Department of Commerce published a notice adding several household appliances to the tariff list of steel derivative items, meaning that they'll be subject to an additional 50% when imported to the US. The new tariff, which will be levied on a proportion of steel contained product, and these steel derivative items are still subject to a 50% tariff. So United States is still not backing down. But like I said earlier, right? China is showing some weakness. They're backing down on their overall lending rates. The People's Bank of China trimmed their 1-year loan prime rate to 3.1%. So I know that sounds like a very minimal move, but you guys got to remember the 25 basis point cut or hike is something that is pretty dramatic, and that we like to kind of see here. So, seeing these things back down, come on down from that, these are super important that we really want to keep a good eye on. So the Chinese measure for the offshore yuan has shaken some depreciation measure, and in no small measure due to a weakening US dollar, right? But China cutting its key lending rates by 10 basis points on Tuesday as a stronger yuan and easing trade tension offer room for monetary easing aimed at boosting the economy. So, China in the end is still not where it needs to be or where it would like to be. So, I'm going to go over how we're looking at the Dixie and the overall strength of the US economy. But if you guys are here already, be sure to be smoking that like Cheech and Chong and hitting the subscribe button. I know that over 90% of you guys that watch this are not subscribed just yet. So, please do that. Help me get to that 1K. And then we'll go and dive in to how the CME group is looking at the chance that the United States is cutting interest rates, right? So if you guys have been coming to this channel for a good amount of time, you know that I go over this number a good amount, and it's 22.7% chance that we will cut interest rates at the next meeting. Now, this will change dramatically in these next 3 days or 33 days and 23 hours. So nearly 34 days, right? It'll change a lot and it will become more accurate as we get closer. But what we're seeing is that, previous meeting, it got to 0.1% chance. It was really floating under 10% chance the majority of the time we were tracking this. Well, now we're seeing, a pretty good chunk that it might happen. And what are we also seeing? We're seeing Fed members come out and speak against Jerome Powell. We're seeing a bunch of people. We're seeing Elizabeth Warren even coming out and blaming Trump, saying that Powell will not cut interest rates because of Donald Trump, which doesn't make any sense because Trump is coming out and fully just calling Powell an absolute idiot for not cutting interest rates. So we have this kind of war going on internally in the US as to cutting interest rates and not, right? Powell or Trump has been, outwardly saying that he's interviewing potential candidates in order to, replace Jerome Powell. Obviously, Powell's term ends here in the springtime. So, he doesn't have much time left here just yet. But the reality of the situation is that Trump and Powell are seemingly at odds right now. So they are, basically looking at all of these things and looking at, hey, are we going to continue to, push this thing forward and, cut the interest rates? Because, you know, when we see the Dixie, we're not seeing exactly a strong US dollar, are we? Right? You guys know since I've been tracking this, who have watching my videos, that it's basically been all the way up to like 101. We've never seen the Dixie this low. 97.1. I mean, I wouldn't be surprised at this point if it's creeped under 97, getting that 96 level. Like, that's some danger zone levels where we're seeing the strength of the dollar. And that's because inflation is still not under wraps. Inflation is not under control just yet. Therefore, the Dixie, what we're looking at, is not very strong. So people are flocking towards assets. So because the dollar is not strong, people are not holding cash. Cash is trash, and they're basically diving in to assets as quickly as they can. So that's why we're seeing the S&P 500 rise up. This is why we're seeing assets inflate. We're maybe even seeing like an asset type of bubble here come along. So, you know, this is something that is very interesting and that we should be tracking here very closely, because the dollar and the overall market strength are tracking very closely, almost as an inverse. When the US is lowering interest rates and the dollar is doing well, obviously, the S&P will start to pump as well. But, with the dollar weakening and interest rates high, and the thought that inflation is not over with, people are going to flock into assets. And especially, when they're having trouble, or we're seeing like people kind of be a little bit more conservative, they're not selling out of anything right now. Even though China is, looking at these different, investment options and essentially just keeping their money at bay, it is interesting that we're seeing, the market start to pump. But you guys have been a pleasure to join here. We got McLovin, the GOAT, in the chat. How you guys doing? I always appreciate you guys coming in and talking a little bit about China and what we have going on in the overall market. So I'm going to keep this one a little bit shorter. So be sure you guys are smoking that like, hitting that subscribe button, telling a friend to tell a friend, and I'll catch you guys all at the next one.